Hold up, before you click apply for that mortgage, listen to this. The credit score on your phone might be lying to you. You heard me right. Bank aren't even looking at that number you see on your Credit Karma or your bank app. So which FICO score do they use? You're about to find out, and it will change how you prepare to buy a home forever. This is Finictra, where I uncover the money truths they don't teach you in school. Today I'm answering the question which FICO score is used for mortgage and why the score you're checking right now is probably giving you false hope about your home loan approval. And trust me, once you hear about the 3 secret mortgage scores that lenders use but don't want you to know about, you will never check the credit the same way again. Quick note, before we start, I'm not a financial advisor. I'm just learning and sharing what I discovered on my journey to understand money. So take this as information, not advice. The shocking truth: your Credit Karma score is irrelevant. Listen up. That shiny number on your Credit Karma or even the free FICO score on your banking app is not the one lenders use for mortgage. Those apps typically give you a VantageScore 3.0 or FICO 8 based on Equifax or TransUnion data. Mortgage lenders rarely look at FICO 8. Why? Because regulations and big mortgage investors like Fannie and Freddie made them stick with older mortgage-specific FICO models. In plain English, your Credit Karma score is a decent general indicator of credit health, but it can't predict your mortgage approval. The 3 mortgage FICO scores you need. Here's the kicker. If you apply for a home loan, the bank pulls a special tree merge report combining all 3 bureaus: Equifax, Experian, and TransUnion. Each bureau runs a specific FICO model on that report. Experian runs FICO score 2, Equifax runs FICO score 4, and TransUnion runs FICO score 5. That's right, the secret scores are 2, 4, and 5. Mortgage lenders then take the middle of those scores to qualify you. So if your FICO score 2 is 670, FICO 4 is 680, and FICO 5 is 690. Your mortgage score is 680, the middle. That's the number that actually counts. Suddenly your 670 on Credit Karma does not mean as much if your middle FICO is below the cutoff. Which bureau does what? To recap: Experian FICO 2, Equifax FICO 4, TransUnion FICO 5. Make no mistake, each bureau's data feed those into score. But they're all slightly different versions of FICO. And yes, if one bureau reports an error or missing account, it can drag your middle score up or down. That's why lenders pull all 3 and pick the median. It balances any one bureau's quirks. Middle score method explained. Ever wondered why banks are secretive about this? Because they want you to see a stable picture. Taking the middle prevents one funky score from unfairly rejecting you. If one report is high and another is low, you're judged by the middle ground. In practice, this means if you find a surprise like a missed payment on one bureau, it might not wreck your chances. If the other 2 score carries you, if 2 score tanks, you're toast. The bottom line, you need all 3 bureaus to look good, not just one. Where to get your real mortgage scores? So how do you know your FICO 2, 4, or 5 before applying? You have options. One is to pay for tree merge credit report from a credit service, for example, My FICO tree merge report. This gives you all 3 scores in one place. You can also check each bureau separately: Equifax, Experian, and TransUnion. But remember that most free services like Credit Karma, Mint, and My FICO Free only shows FICO 8 or VantageScore, not those mortgage scores. In short, if you want the real mortgage score, you will likely to need the official report or work with a lender or broker who pulls tree merge. It's small cost for huge peace of mind. Minimum scores by loan type. Now let's talk about the numbers. The cutoff score depends on your loan type. Conventional, like Fannie or Freddie. Lenders generally want that middle score around 620 to 640 at minimum. For the best rates, aim for 680 or higher. FHA loans. HUD only requires 500 if you put 10% down, or 580 with a usual 6.3% down. VA loans, no program, wide cutoff, but lenders ask for at least 620. TA loans typically needs about 620. Non-QM or bank statement loans sometimes qualify in 600s, though usually with big down payments. Bottom line, if you're under 600, stick with FHA, VA, non-QM programs. Conventional money probably needs mid 600. How to improve your mortgage FICO scores? Okay, so you know which scores matter. So how do you rise these three? First, treat your credit report holistically. Everything you do, on-time payment, low balance, length of credit, helps all FICO models, including 2, 4, and 5. Some targeted tips. First, dispute errors. Pull your free annual report from each bureau. View annualcreditreport.com and fix mistakes. Add trade lines. Lenders like to see at least 3 accounts: credit cards, auto loans, etc., aged 12 months to 24 months. If you only have one card, consider opening another major card, not a retail card, and keep it open for at least 6+ months before applying. Pay down revolving balances. Keep utilization under 30% and never miss a payment. Payment history is 30% of FICO. Even one 30 days plus late mark can tank your score for 7 years. Building mortgage ready credit. Realistically, building a clean mortgage profile takes time. Start correcting negatives at least 6 to 9 months before applying. Check and clear errors 2-3 months out. If you need a new credit, do it a year or more in advance. Use it normally. Essentially, begin your loan preparation 2 to 3 years ahead. Stabilize your job history, save for a down payment, and keep your credit age. Steady good habits will rise those mortgage scores over time. Common mortgage mistakes to avoid. Don't say yes to every store credit card or buy a new car right before closing. Big new debts or hard inquiries can kill your approval. Don't pay everything and then close accounts. Closing accounts can hurt your score and remove seasoned trade lines. Don't move all the cash around the last minute. Lenders check statements and weird transfers can trigger facts. Don't assume your Credit Karma score is enough. Get the exact FICO 2, FICO 4, and FICO 5 scores ready. Success story examples. Meet Jessica. She had a 680 on Credit Karma but only one credit card initially. She was denied a conventional loan. She got 2 cards, kept 6 months plus, and paid off 2 auto loans. On application day, her pre-merge came 684. Her pre-merge came back 648, 675, 682. Middle 675. Because she added history and paid off debt, she qualified. Jessica point: even if your head score is good, boosting the specific score lenders use through diversity and consistency is your right path to understanding which FICO score is used for mortgage is your secret weapon. It's not the score your app shows, but the middle of FICO 2, 4, and 5 from the pre-merge report. Treat those mortgage scores as your goal post. Clean up your credit report, build trade lines, and save funds. You will put yourself miles ahead in home buying race. If you found this helpful, smash the like button and subscribe for more money truths, and hit the notification bell so you don't miss the next deep dive topic. Drop a comment what score surprised you the most.